Hey guys, welcome back. In today's video, we are talking about the shorts increasing demand, AMC at $116 per share, the 100 billion market cap target, and many more in this video. First, we're taking a look at this. So the borrow fee drops out of nowhere as over 85% of all trades are being directed straight to dark pools. So when we take a look at the cost to borrow for AMC, what we saw was that it dropped today. Now, one thing to mention and note was that the demand for AMC shares has been increasing. The shares that has been used to borrow, to lend, has all gone up. And under normal circumstances, we are supposedly meant to see that the fee, of course, continuously goes up, especially as we see more and more shares are being borrowed. Now, the fact that we see it go down, especially going back to what we covered in yesterday's video, it starts to make sense and the timing is correct. Yesterday, we talked about this. The last updated on this particular white paper of AMC, a synthetic asset tracking real stock prices, where we talk about the tokens that were used to then locate AMC shares, despite the fact they don't actually have any AMC shares. Now, this was the white paper that was released in early 2021, and it was still being updated at 27th of January in 2026. Now, the whole aim of this was the fact that it allowed institutions to locate shares of AMC through these tokens without actually needing to locate real shares. And this was one of the biggest reasons for why we saw these short sellers were able to find shares of AMC short, and more importantly, not pay a large amount. So now, as we see that these white papers are still being edited and we're suddenly seeing the cost to borrow go down for AMC, despite the fact that shares are being borrowed and the demand is still increasing, it starts to show what is going on. Everything that we have talked about in the past is, of course, still happening. The very fact that they are still tokenizing AMC and using it despite the fact they haven't given any proof of actual shares is what we are looking at right now, and it's how they are able to get the fees down. And so when we talk about why all of a sudden all of these firms are trying to push for tokenization, whilst there are some firms as well who are against it because of the transparency, you start to see why they're doing it at a time where they're desperate for shares like AMC, for shares like GME. Now, furthermore, a thing that we talked about is, of course, the off exchange, where we're looking at it to be 85% off exchange total. And so once again, we're seeing how it's being routed into the dark pool. Now, I want to go more into this, especially with what we see here. Looks like a ladder to me, and according to infamous short seller John Hempton, these happens in dark pools where market manipulation is a manipulation because it doesn't happen on market. Now, this is, again, just John Hempton, a infamous short seller, someone we've covered about in the past before, who's very famous once again for talking about his viewpoints on shorting AMC and pretty much admitting to crimes. Now, the only thing is he's actually based in Australia, and he claims that he has covered AMC, yet he continuously talk about ladder attacking AMC, shorting AMC, whilst claiming he's covering all of his shares of AMC. Again, it doesn't make sense, but this is something that we've seen him talk about all the time. And if we take a look at this, the flows captured in dark pool by trader size, you can see that 89.1% of dark pool are seeing the retail trades being routed in the dark pool, and only 29.2 for professional, 23.2 for institutional. And so when we take a look at what's affecting these prices, it's not going off of the demand of retail traders because we are only seeing a very small percentage. But in fact, the professionals, the institutionals, the one who are in trouble gets to control the price of AMC, and is what we're looking at here. And it goes on to what we talked about before in the past as well. When we take a look at the majority of dark pool orders, they are actually buy orders as opposed to sell orders. And the reason for why we don't see it actually go up is because of reason like this. And recently, we've obviously seen this spike up as well. Again, we're seeing all of these things happen in AMC because anytime you see volume, anytime you see any upward momentum from AMC, we start to see these things happen. We start to see the increase, the edit of white papers, the decrease of cost to borrow despite the fact they are in need of shares, the increase in dark pool usage, the ladder attacks on AMC. That's what we see anytime we see slight momentum to bring AMC upward. You can see it from the candles, the price action in the last few days. This is on a normal technical analysis, is showing how buyers want to take control, how buyers want to bring the price up, but it's face of sellers. But in this case, we know it's not face of sellers because for AMC, we can see that no one's selling. But what we can also see is the continuous short selling, the continuous manipulation that happens to AMC. And it's also at times like this where I find something that's interesting is the glitches that are then happening. For AMC, we saw AMC glitch where it goes $116 per AMC share. Now, we've always talked about that potentially what they're doing OTC is that there are institutions who are trading AMC shares at this price. The reason why we say this is that potentially there are some firms who are in desperate need of AMC shares. They need to cover some of their positions and they are able and willing to pay a large premium to other institutions. And so this is obviously done for OTC where it doesn't have any effect on the price of the stock whatsoever. And they do this. We've seen this happen in the past before in terms of exchange data, which has shown what some of the trades has gone through. We've seen plenty of times, these quote unquote glitches happening. And the fact that it always happens on AMC and GME is the thing that we need to wonder about why that is. But also the reason why I think that this is something that's very, very possible is because if we look at this $116 per share for AMC, when you take a look at the drop in market cap for Nvidia today, it corresponds to approximately $400 per share. Now, we've said this in the past as well, in terms of the fact that some of these stocks, especially these tech stocks, these AI stocks, have been used as collaterals to short and suppress AMC. So when we saw that there was over 5 trillion in Nvidia, a lot of these value were used and borrowed as collateral to short AMC, to short GME. So the fact that we are seeing, Nvidia dropping this much and that it corresponds to $400 per share, it wouldn't surprise me to see that AMC can be trading at 116. I've already said this before. I believe that AMC is way undervalued. It should be easily in the double digits and it should be easily in the triple digits. And so to talk about this is something that I said is that where I think we should be. And now another thing that we're seeing is that also we're seeing glitches happen on the SPY where it flashed the wick to 69.01. Now, this is very interesting because this was the exact 2008 crash bottom. Now, we've obviously talked about how the market is extremely unstable recently because of everything that's going on. We're going to talk more about this later on at the end of the video as well, but you can start to see that perhaps there are some signs of what's about to happen for the overall market. And if we are seeing the market crash, that's when we're going to see really AMC and GME really come into fruition with what we've talked about in the past. Now, another thing you can see from Michael Burry here, GME potential targets and plan for $100 billion. Now, one thing that we've seen recently is how Michael Burry is very strong on his opinion in GME. We talked about his talk as well and what he said about Ryan Cohen. We've obviously talked about the Ryan Cohen acquisition as well in terms of GME and what they want to do. So there is a lot of things. And if they are aiming for that 100 billion price target, that 100 billion market cap, then this is something that we are of course looking forward to. And one thing to note is that if we are seeing GME going to $100 billion market cap, bear in mind is that if the short somehow still hasn't covered by then they will be in a world of troubles. And that would then further increases the market cap for not only GME, but also for AMC as well, because of how much stress these capital institutions would be in. Now, speaking about the acquisition, the M&A from GME, we see that White and Case LP have worked with GameStop on numerous corporate matters. They also specialize in M&A. Given the GME connection, would be wise to take a look at the recent deals they advised on / completed. Now, this is what we are looking at, and this is potentially something that GME can be looking at. And it's obviously very important to note because what GME is doing right now could be extremely pivotal. It could shape what GME is going to go for the next few years. And ultimately, it is the pathway towards that $100 billion market cap. And so these are some of the things that we obviously need to watch out for, we need to pay attention to, and it could potentially be something that's worthwhile as well. Furthermore, What we've recently looked at is Hycroft. Now, for the last few days, Hycroft has been dropping. I've already given my opinion. I've said that I am not worried about it whatsoever. And you can even see Hycroft share price declining on no news for several days. Surely seems strange where we see it go down. Now, of course, there was the reason to silver dropping. So for me, I'm not going to say that there was zero reason whatsoever. When we take a look at the silver price going down that much, it's not surprising that Hycroft also had an impact. Now, did I think that it was going to continuously going down? No, because I knew what was going to happen to the market, not only for Hycroft, but for silver as well. And also, I knew that one of the biggest reasons for why Hycroft dropping that much as compared to others was because of the suppression that it was facing. If we go back to something I talked about earlier on, you can even see that John Hampton, again, the infamous short seller, also hinted at naked short laddering attack, HYMC. So we already know that this is something that's facing suppression. So today, what we have seen is how Hycroft have beaten all of these, rumors, all of these haters. What we saw is that as of the end of today, Hycroft was actually up 19.48%. Once again, I'm not surprised by that. I know what Hycroft is worth. I know what it should be worth, and especially with the market right now. Not only that, we can see Diane talking about we welcome the strong admin and Exim Bank recognizing critical minerals are foundational to American manufacturing. Just talking about the opportunities there are, obviously talking about, the investments that are going on. And so we have to know that there are still plenty of opportunities. It was people taking profit, but more importantly, it was banks who were worried about margin call, so they had to manipulate the price of silver. And the short sellers who were getting margin called by Hycroft were also facing the same problems. Because another big thing, if you take a look at what's happening, is that money is rotating out of equities and into metals. This is classic stress behavior. We're looking at SPY being sold because firms want less risk. We're seeing SLV being bought because people want safety. And more importantly, if you take a look at the manipulation of SLV, you start to see exactly what's going on. HYMC as well. And so this is what's happening, is why I'm not afraid of what's going on. And just like I said, for AMC, for the apes, for those of you who have exposure to HYMC, I am not worried whatsoever. We already saw it go up 19%, and we're only going to continuously see that going up. And bear in mind, we saw it going up 19% despite silver and gold really having a major movement. We're still seeing it floating around $85 for silver in around this area. And so the room for growth is still so much. You can see heavy leverage, margin calls, claims of a manipulation rock silver spot prices. This is what we talked about. And in the past few years, we've seen plenty of banks being called out and fined for doing exactly that, for manipulating silver prices. And so we have to realize that the demand is still there. We talked about how the Chinese silver prices is an indicator, a leading indicator, in fact, for what we should be looking out for. But more importantly, the very fact that the demand is still there, the very fact that people are paying, $100 for silver prices, we are not worried about what the paper is saying, because ultimately it has to catch up to that premium. It has to catch up to that spot price. As you can see today, gold breaks above 5,000. Like I said, we're not seeing major moves happening, but we are still seeing the bullishness coming in from gold, the bullishness coming in from silver. And there is still so much room for growth. It's like why I said 19% for HYMC. It's just going to be another day. And we're just going to look at it as a normal thing for the next few weeks, next few days for HYMC, for the market. You can even see how they are increasing the silver price target, which has gone to $150. And bear in mind, we're not even seeing silver at $100. And the very fact they're raising it to $150, it really shows, what is going on, what their thoughts are. Now, some things we talked about earlier in the video about why people are worried. Now, one of the things we talked about is, of course, silver, but we're also looking at how people are worried about default, about deferred payments. And this is ultimately something that I think not talked about enough, because whilst these are for private equity, this is something that will have a huge impact on the majority of the market, especially because of what they're involved in. Not only that, you can see this should not be happening. Well, we're looking at bond yields, which are going absolutely crazy. US 30 years hitting 4.9, Australia 5 years up 2%, Japanese 10 years, something that we've been talking about, is breaking out. And this will never happen in a stable economy. And it's why we've said we are looking at very likelihood of an extremely turmoil market, very likely to be looking at a potential massive pullback, which could cause to liquidations and margin calls. And then we're even looking at here about how private lenders holding $100 billion in software loans are nervous. And this, I think, is going to be something that could be major, because if this carries over to, Nvidia, Palantir, CoreWeave, all of these things, it could have massive effect. As always, none of this is financial advice, so do take our Instagram. So make sure to do your own due diligence and research, and I'll catch you guys next time.